On this episode of Industry Relations, we talk to John Cambell of Stevens, and we get Wall Street's take on the real estate industry. This is Industry Relations, a podcast that's at the intersection of real estate and technology from an insider's perspective, with Rob Hahn and Greg Robertson.
Hey everybody, and welcome to another episode of Industry Relations with Rob and Greg. Boy, we have been consistent, and hopefully technology won't let us down on this Casual Friday version. Mr. Greg Robertson. Greg, hey!
Hola.
It is the Casual Friday edition. And we didn't even call each other, but like, look, I could put on glasses. So we could do the hat.
Okay, yeah,
glasses.
So this is the look.
It's the look. It's the Industry Relations look. How are you, man?
Good, man. Good to see you.
Good to see you. I haven't heard much in terms of response from our team, Marge, team Brenda, but I have to say that was one of the more fun ones.
Yeah.
Have you heard anything?
No, I heard a lot of good comments on it. So I think they appreciate the banner back and forth. And I'll do another thing. I'll do a shout out to you. I mean,
yeah.
Recently you just published a great post, a great article called JP Morgan and CoStar's residential strategy. Now this is under the veil of the Notorious VIP, so that's right, subscriber only type of content. But man, if there was an ever reason for anybody to sign up and get that $200 for $200, it would be this article.
It's not even 200; it's $20.
$20. Okay, yeah. So there you go. Right. So. I would say go the year, but I mean that's me, right?
Of course, I would as well.
But really like spot on analysis, yeah. And I know we're going to be talking to some really smart people here on the podcast, a person on the podcast. But just a shout out, if you guys have not signed up for Rob's Notorious VIP subscription, you got to, man, because just for that article alone. So really good.
Thank you, Greg. Thank you very much. But so that's the thing, is it was just an analyst sort of note that I did a take on. And then, amusingly enough, of course, I've gotten, shall we say, some protests from
as one does.
One executive out of that CoStar, which was bizarre. I'm like, you understand when I say like Andy is a genius? This is like a praise, right? This is a compliment. But okay, you want to protest it, whatever. But I think what's cool is that we have someone with us that's actually going to help us understand a little bit, because okay,
thank
yes,
God.
We're
Thank
industry
God.
people. I have my take on it, but we don't talk to the Wall Street crowd. We don't do the analyst days. So I wanted to bring on an old friend who's been on with us before, who is one of those guys. So let's bring him on, Mr. John Cambell. There he is.
Here we go.
How are you, John? So John is the equity research person, I think one of the best actually on Wall Street, that covers real estate, proptech. I mean, this is your beat, right? So I know you've just went through the whole earnings season, and if anyone's paying attention to this market, real estate and public companies in real estate, it's you. So we just wanted to kind of get your take on a lot of these companies. So it's not going to be quite rapid fire, because I think there are certain companies that I think we're more interested in, than others, for good or for ill. But you heard just that exchange. So before we even get into CoStar, let's start with the big dog that everyone's obsessed about, that's been driving, the whole conversation for the last few years, Zillow. What's your take on Zillow? I mean, look, I read your note, but obviously most of our listeners haven't. But so what was your take on Zillow? What do you think Wall Street's take on Zillow is now, especially after they sort of exited iBuying? It seemed like there's a bit of egg on their face, but they just post some very strong numbers, and you wrote about it. Give us your take on Zillow.
Yeah, so I've covered, and thanks for the kind words earlier. And I'm also going to say, if you're not subscribing to Rob Hahn, you should. Absolutely. He's helped me. He's given me plenty of food for thought over the years, and we've had a good relationship, kind of back and forth, sharing thoughts. So highly suggest that. But on Zillow, this is one we've covered for, since 2013. Yep. It's one we've been very close to. Coming up from our angle, the coverage list we have is real estate services. So most analysts on the sell side are going to be kind of vertically focused. They're going to cover all software companies or all insurance companies, whatever that might be. We're taking a bit of a unique approach and going horizontal, which I think Zillow is kind of it kind of mirrors our coverage list, where you're going to start off at the top of the funnel, and then they want to go further and further down the funnel and touch multiple parts of the value chain. And so I feel like, I'm not going to say we saw everything coming, but I feel like we were under the view that they would get deeper and deeper into the transaction. I think iBuying was kind of a newer concept we didn't really think about in the past, but certainly launching mortgage and, closing services with title and all that around the transaction, I think that makes a ton of sense. The iBuying side, I think, Rob, you and I have differed a little bit there. I think there's a place for it in the market. I'm not a huge fan of it, and thinking it displaces a significant chunk of the market. But I was frankly a little surprised that they backed out of it so quickly. My view is Zillow has plenty of resources, plenty of capital. They just got done talking about how great that business was, the prior quarter, and how things were, off to the races, and then they just kind of suddenly back out of it. So my view is a company like that, with brash leadership, with a lot of resources and a lot of capital, has a next best alternative. There's something coming. And when they talk about this super app, I think it's vague for a reason. I think for strategic purposes or competitive purposes, you're not releasing everything, showing your full hand at this point. But I do think them coming out of iBuying is them seeing something better. I think it's as simple as that. From a Wall Street analyst standpoint, or from an investor standpoint, I can tell you for a fact that a lot of the big PMs I've talked to in the past who just could not get over iBuying, right? It was, balance sheet intensity. And these are historically tech investors who are used to big margins, recurring revenue, stability in the model. Now we're talking about utilizing our balance sheet and throwing on all this revenue it losses, right? And so you had a lot of rotation. People came out of it. I can tell you for a fact that a lot of those conversations with those people that I've had, 5-6 years ago have come back, So I think what you're seeing right now is a little bit of rotation in the stock. And people are still, like CoStar, which we'll talk about in a little bit, trying to really get a sense for what's coming, trying to get a grip on it. I think the $1 million question that nobody's asking at Zillow that and I've got a thesis I'll talk to in a little bit where I think they're potentially going to do. But if I had to answer this question, I might, I would be convicted in that thesis, or I would punt it, which is, as you've backed out of iBuying, clearly you staffed up a lot of internal agents, right? And the whole notion and the message to the industry was that we are utilizing these agents to cut cost, right? Instead of having to utilize an agent when we buy a house, utilize an agent to sell it. We'll just sell it ourselves, right? And reduce the commission costs. And so they've been able to kind of layer on. I'm not saying this is like Russia lining up the troops on Ukraine, but they were able to add a lot of agents without freaking the industry out too much. I think the question is, as you've announced 25% reduction in headcount as you get out of iBuying, does that include the agents? Because if you're getting agents strictly for iBuying, you get out of iBuying and those agents are sticking around, why? I think the question is why. Could there, and I've looked at this over all these years, and there's a lot of interesting elements to the Redfin model. I think Zillow could become the Redfin model by flipping a switch, right? It has its brokerage licenses, it has the listings, it has now booking technology, right, with showing time. So if it really wanted to get really deep in the transaction and actually touch the commission dollars itself, because they're kind of doing it obviously already with Flex, right? They're kind of acting as a brokerage without having agents on staff. I think the question is, could they look to maybe sell your house? As crazy as it sounds, I think it's one of these things where I think about it like this. Is it as easy as changing the button when you go in and you say, when Zillow says sell your house to Zillow, changing that button to sell your house with Zillow, right? We can give you rebates, right? We can tie in mortgage and title and give you rebates there, like Open Door's done. Like there's a way from a consumer standpoint to save money. And you would say, oh, you're kind of punting the golden goose there. You're ruffling the feathers of your customers. They've been doing that for years. Right.
Well, that's Redfin. That's Redfin, though, right? I mean, the model you described is Redfin, and I've always heard the thing with Redfin is like, all my non-real estate friends use Redfin's app. Everybody likes that app, right? But the kind of conversion from the app to actually become a customer has always been the struggle.
Yeah.
Right. I mean, sure. I don't know about Zillow being any more successful than Redfin of upping that conversion rate. I mean,
could you just imagine the industry firestorm that would happen?
Yeah.
Yeah.
So I don't think it would be a full-fledged Redfin, like swapping the whole model, but like you could cherry pick transactions, right? If you find somebody you think that house is going to sell in 2 days, represent them yourself. But, for the large part, I mean, and that kind of, they talk about capturing the sell side of the economics. I mean, Zillow's built this entire empire on the buy side. They've tried. The Zestimate helped a little on the sell side, bringing people in, but it wasn't high enough intent. They tried Make Me Move, right, where you can list yourself. That they've done get a free assessment from an agent. That really never works. And iBuying was the first time they really opened the door, where they got somebody at the bottom of the funnel who raised their hand and said, "Hey, I'm high intent. I'm about to sell. I'm either selling to you or I'll sell traditional way." And so I felt like that was the first time they really could start to meaningfully unlock the sell side. This is a way for them to do it. Just another angle. And maybe they toy around with it. Maybe it doesn't happen at all, but maybe they pivot. Who knows? But Zillow is known to do these type of things in the past. So again, we're not going to dwell on it. We're going to have a separate show, John, where you and I can argue about this. Yeah. I just can't see that. If they did that, that literally would be committing suicide, I think, because they no longer have a sell side product. So they no longer have anything that attracts sellers. And if they were to really go out and say, we are going to start selling houses, we're going to actually be like Redfin, literally every listing agent would just pull the hell out.
Yeah.
They'll be like, okay, well, that's it. We're done. And, it just opens the door up for CoStar, who probably is the next company we should talk about because.
Well, but hold on. Let's talk about this a little bit. I mean, to me, I think it's simple. I mean, I call them, Zuber now, right? I mean, basically, I think they're just going to double down on the experience they give now, where right now they have an app where somebody presses a button that says contact an agent, right? Or, let's say, even further on, it's like, show me this house, and nobody's responding, right? It's like you have Uber, you have this whole infrastructure set up and you said, call a driver and no driver shows up.
Yeah.
With the acquisition of Showing Time, right? And that gives them direct access into the showing software that most people use on the MLS. And then the Flex with the Flex program and the fact that they're only going after kind of high-end agents that really are producers, they're going to close that loop, right? And that's going to mean more revenue for them, right? But the missing part is, and the thing is, I think Glenn talked about this on the last earning calls for Redfin. They talk a lot about that showing button on their app, right? Come and show. So I think that's a bigger deal than people think. And I think if they can just up the number of people engaging with this super app, and I think one of the big things about it'll be a big show me the house right now. Sure. And that's gonna be a big feature of it. That's gonna increase the model they have right now.
Okay, so let's get into it, because this is exactly in line with your Marge versus Brenda thing from last the last episode, right? Essentially, look, you can do that if you have listings. Zillow has no listings. Zillow doesn't take any listings. When Zillow was doing iBuying, there was a chance that Zillow could have listings because they were going and buying their own homes. Going forward, Zillow has to rely on the listing agent to put the listings onto Zillow. Now, you could say, well, Zillow's a member of the MLS, and therefore, dude, I'm just saying, if Zillow really made this move, every broker, every agent in the country would have to think twice about actually putting their listings into the MLS. And if that means they have to drop off the MLS, I think some of them will. So I think it's utter suicide for Zillow to do that. And the fact that Zillow, if
Zillow became was selling houses, you're saying,
if they became a broker, like a full-on broker, not just a iBuying broker, a full-on Redfin broker, I think it instantly makes CoStar like the number one platform to go find listings. And if MLS and NAR are going to get in the way of that and start fucking around with agents and brokers, they would all tell NAR to go pound sand. I truly believe that. We should do a survey. Our listeners are MLS CEOs, they're brokerage CEOs. I would love to know. I think it is a Rubicon that Zillow cannot cross.
Yeah, I will tell you, and this is my. I don't want to be clear here. I don't think they become Redfin. I think it's just a sliver of their business, and they can cherry pick when they want. Right. And then also, to Greg's point, I mean, I do think yes, the Uber button, as you put it, with showing time. I mean, they've already changed it. You mentioned that could be coming. They've already changed it. If you go to their site now, where they are pointing you is to book a tour. Right. And I think Redfin will tell them that is, if you're doing that with your own agents, that is challenging. That's almost like Best Buy versus Amazon, where you go to Best Buy and figure out the TV you like and you toy around with it and see the picture, and then you go back to Amazon and buy it. I think that's kind of the approach. But
no, it's execution for sure. Yeah.
Yeah, and maybe you keep the agents on staff if somebody's trying to book a tour, because they have told you that a big chunk of these tours are not being fulfilled. Right. So maybe they keep agents on staff to go tour the house with you. I don't know. Who knows?
I could see them doing something like that, where they'll say, hey, listen, we're going to be almost like, these, what's it called? Showing agents or assistants, to our premier agents. But if they were to start really getting into like, we're going to start touching the commission directly, I think we'll just see hell break loose, which would be fun for us. Let's be honest. It would be a lot of fun for Greg and I, but it would be a lot of fun for you, John.
Yeah, it would be great. I do think, obviously there are a lot of agents out there who have expressed displeasure with Zillow in the past. And I won't give the name of this agent. One of the agents I talk to quite often spends well over $5,000 a month with Zillow and hates them.
Right.
And you've got 1.6 million realtors and 800 something thousand listings, like more, you've almost doubled up the number of agents versus listings. Leads are powerful, and whoever's providing those leads is going to have that power, Yeah.
It's just like Uber drivers complaining about Uber, right? But they'll complain about while they're taking around places.
Right. They're going to cash your check and bitch about it.
But that's only if Uber is like really monopolistic, which then brings us to a second company, which is, My point is, maybe Zillow could have pulled something like this off 5 years ago, 3 years ago. Now, CoStar's in the game.
Yeah.
And they are probably one of the more important companies. I know you're also covering CoStar. What's your take on CoStar?
Yeah. So we had, I have closely followed CoStar for over a decade. It used to be the biggest holding in my private account. And then I launched coverage and I couldn't hold it anymore. So that was a bittersweet moment having to sell CoStar out of my private account. But, this company is, like Andy Florence is, I think, one of the best leaders I've run across in my time covering this space and just in the markets in general. I really, truly think he's an empire builder. He's very smart. And, it's one of these things on Resi that fit right in our wheelhouse, right? We've already, we were kind of looking at it from the commercial side and multifamily, and then they launched this move into Resi, and people are coming to us because we cover this Resi world, right? And there's lots of the elements of Zillow, and having to understand the MLS system, which is crazy at times, having to understand the thought process of brokerages and agents and how that construct works together. Is crucial to understanding potentially what CoStar could do. It's also crucial to understand Rightmove and REA Group, what those models are, how they're able to have those models versus the MLS system here, how they're different, and understanding all these various pieces, I think is helped us, I think, have at least a view. And, back from our report, I think it was in July of last year, we talked about Resi and some of these moves. I feel like we kind of hit it on the head to some extent. My view, big picture, is I think Andy has essentially put somewhat of a call option, and it's been a low cost option when you think about the price for HomeSnap and Homes.com. But it's one of those things where I think if something happens with MLS, right, and not saying it falls apart, but like for the first time, I think there's very serious DOJ reviews, class action suits. And I think if you read some of these class action suits, and there's ambulance chasing stuff constantly in this space. Yeah. There's a ghost in my basement. I need to go sue this person, right? That sold me this house. Always something. Going through those court cases, those lawyers have put together a very compelling, I think, argument. I think it's factually based. I don't know what your views are on all that, but I think for the first time,
what my views are.
I know what your views are, Mr. Doomsday. Yeah. But I think it's one of those things where Andy's move into Resi coinciding with that backdrop is not a coincidence. He is very, very smart.
Yeah, there's no coincidences, right? That's what we always say on this podcast.
There is not. There's not. I think it's one of those things where, and I don't want to put my tinfoil hat on, but like he is, and the whole, the old saying of skating to where the puck's going, the Gretzky saying. I mean, that's what he constantly does. They have experience of building marketplaces from scratch. They have experience from choking out competition. They have a lot of experience there. And some of the stuff they're looking to do around the content creation. And Rob, I read your piece the other day. I think you're right. I think there's a lot of even sell-side analysts that are not fully grasping.
Right.
And they're missing some crucial elements to I think what CoStar is up to, but around the content creation. And this is funny because, when I talk to CoStar, talking to the management team, and asking some bits and pieces about the strategy. And they're like, well, that 300 million of investment this year, large part of that's going to content. Mm-hmm. And I'm like, pause. I'm not going to take content and put, they're investing in content. What is content?
Right.
Explain that to me.
Right.
And so this is where we get really into, and CoStar obviously has experience in putting field researchers, putting people's feet on the ground. They're actually, some of that spend is to buy cars and to buy software to get this into a database. And so like, that's kind of what they're doing. They're going to go to these neighborhoods. They're going to get really down in depth into the neighborhoods. They're going to figure out amenities. They're going to figure out stuff. And like, there are companies that are getting funding out there, like Nextdoor. That is literally just a social media site that the value is it's everything about the neighborhood. It's crime, it's new events coming on, it's parades happening, it's all that stuff, and that is lacking from MLS, and one of the goods and bads about the MLS, the good is that, we can structure the data and we can get all the listings, but we can't differentiate, so now CoStar, Zillow, Realtor.com, Redfin, it's all basically the same stuff. And so I was talking with my team here the other day, and one of the things we were looking for is how, let's just say you get a lot of information about a neighborhood. How important is that from a big picture standpoint? How many people are moving 5 miles, 10 miles and know that neighborhood? Is it redundant or is it unnecessary information? And I think what we ran across is that you've got something like 35% of people moving are within the same state, 20% go to a different state, only 43% move in the same city. I was thinking at one point that would be a lot higher. And so you do have people going across state lines. And I think that's obviously picked up a lot with work from home dynamic and COVID and whatnot. I don't know how long the migration happens and how often that's going to happen from here. But, moving to a new city and not really knowing a whole lot of people, your agent is super important, right?
Yeah.
Content. So go ahead.
Yeah, that's one side of the thing. So, I can see where they want to differentiate themselves from Zillow and others by providing this next level of content, right? What Rob's article also spoke to is that a lot of that was like, they're not only going to advertise to agents, but advertise, the properties themselves, right? Yeah. And then Rob, and to me, what did make sense is like the seller was going to pay for those upgrades.
Yeah.
I mean, I've hired an agent to sell my house, and then CoStar is going to say to me, hey, you should upgrade your listing on CoStar.
Yeah.
What the hell am I paying the agent for?
I will say, and that's a good point. It's a fair point. I will say,
and that's a fair point, but that's where they're saying that huge TAM comes from. Is that
but that's REA Group, that's Rightmove. That's
but so what you're saying is, if the asteroid hits, as we talked about, if all this shit blows up, and MLS is not what it is today, that's going to be the model where the seller has to pay it. But that is not currently the way things are set up now. That TAM is ether.
Well, right? I think that TAM is still there, whether it comes out of
but not it might be there in Australia.
Well, it's
not here in the U.S. though.
Well, I disagree. I think whether it comes out of the agent's pocket or consumer's pocket, it doesn't really matter. Like, the fact of the matter is nobody's paying for enhanced listings right now and showcase listings. There's not an option. You can't do it on Zillow. Redfin, that's one of the things they tout as a competitive advantage. They can showcase their own property, stuff like that. In the current market conditions, that shit doesn't matter, right? Like home, like a monkey could sell a house. You could sell a house in 3 days.
You can hide it under a rock,
right,
and you'll still sell it. Somebody will find it.
People will find you. Yes,
and there's some nuance to that. Realtor.com, that's what a lot of the revenue model was based upon, was showcasing listings and changing the order, bubble up your listings to the top and things like that. And it was a horrible consumer experience.
Yeah.
Right. So this is not new stuff. There's a fine line of the execution of that is really nuanced, right? You can do it right. I think Redfin does a good job, but if you do it wrong, it's a horrible search experience.
Well,
if I'm searching for a home, I want to find out the listings that match my search, not, some flaming logo coming to the top, hey, choose me, right? I mean, that's horrible. I hate those kind of sites.
I think CoStar at least has a blueprint. It's done well in driving the marketplace for both LoopNet and Apartments.com, and they use a tiered ad package. And I think they've done a good job with it, with the cosmetically, like it's just you're paying more and your image is a little bit larger, right? And there's retargeting to it and stuff like that. So there's a way to showcase and there's a way to advertise on the sell side without blasting you with that information. Like you can retarget people as they go search other sites and stuff like that. So I think there's things that they've proven out that maybe could work on Resi. But I do think the market conditions have to be different, right? Clearly we have to be more in a balanced market. Like right now it's just, but what better time to invest and put the puzzle pieces together, ahead of the market turning it, whenever that happens, 10 years, 20 years now, I don't know, when inventory ever builds again. But I do think I like them attacking that sell side. And I will tell you, from me, my personal experience, when I sold my house from Memphis and moved to Little Rock, I sold it in 2011. And it took me 8 months to sell the house. I went through 3 different realtors. The final realtor took out a back page ad of the commercial appeal, the Memphis newspaper. And my whole thing was like, good heavens, what are you doing? Anybody who's going to buy this house is not reading the newspaper. This is like a young neighborhood. You're going in the wrong way. But like, had I known about something like a CoStar, let's just say that they end up scaling traffic, building it, I would be demanding that the advertiser don't host open houses, don't do anything like that. I want you to advertise on CoStar and get in front of users and retarget and stuff like that. That's how I want you to try to sell my house. So I do think it makes sense in some markets, but just winding back, I do think a lot of this is a call option for Andy. Is if they rebuild the MLS, if they become a centralized MLS. I mean, I think his stake is, if that ever happens, we'll be here. I don't think they're going to try to force the change.
That's a big bet, right? But it does go back to what you're saying, where it is making a bet on where the puck is going, right? It's just, I think, but the other thing about that is that, okay, there's also the other elephant in the room, Zillow, right? So as more of this becomes unveiled, now you have some smart guys over there that are not just going to sit still and watch this happen, right?
Right.
And I mean, Zillow is like part of our culture now, right? They make SNL skits on it and stuff.
Yeah.
I mean, it's going to be very hard to, I think they had as Rob was talking about in his article, about a 5-year strategy. And who knows when this inventory crisis is going to end. Some are predicting not in 5 years.
Yeah.
There's a lot of things that have to happen here for I think his bet to happen,
Yeah. And I agree with you. I think it's it's not a long shot bet, but the potential economics, like if you think about risk reward standpoint, and this is how these guys manage their business. Every company on Wall Street's managing business. Every dollar they invest, they're trying to think about the hurdle rate and what their return is. And you put a risk weighted analysis on that. And if this is your best potential, that's where they're going to go. And I like how, they don't have to necessarily be fully committed to this, because the cost to buy in was not that much. Now they're going to have to throw some chips on the table now as they put another 320 million of investment, but it's going to be an iterative step where right now they're going to build the content, right? And once you get to that, you're just going to hit first checkpoint. It's going to be, all right, is this content good? We're going to run surveys and focus groups, and you and I will be able to see it. We'll go to homes.com and damn, this is really good content, or oh, this is not even worthwhile. But that checkpoint, once you get to that, if it is worthwhile, then you throw in the marketing, right? You start to build the traffic and stuff like that and try to drive the scale. And so I don't think you have to go fully $1 billion all in.
Yeah, I mean, I think the thing here we're going to see is the City Snap. That should be a preview of what's going to be happening, right? So that'll be interesting to watch as well. Yeah.
So before we move on, hey man, gun to the head. You're a buy-side analyst, and you are told you have to put $1 billion into either Zillow or CoStar. Ooh. Which are you picking?
Good question.
And you can't diversify. It has to be all around one or the other.
It's going to be CoStar for me because there's more to it than resi. Like the commercial, they are the gold standard of commercial, the true definition of monopoly, and they haven't even started their international push. And there is probably 3x the addressable market overseas relative to the U.S. So,
what do you take of that Business Insider piece?
It's funny. I actually talked to that. I was interviewed by the writer. It sounds like there's another piece coming out around Andy himself. But I thought it was unfair. Is probably the best way to describe it. Talking about companies' attrition rates being up, like what companies' attrition rate is not up right now. I mean, like it's a game of musical chairs for a lot of folks. And CoStar clearly for their customers, they need to show good face. They need to get their employees back in the office. We need to make sure that office doesn't fall apart.
Oh, yeah. It'd be like Rob or I doing a FISBO, right? I mean, they gotta eat their own dog food, right?
Exactly. You gotta eat what you're serving. That is for sure. So yeah, I mean, I wouldn't look too far into it. And them saying that Andy is a tough leader. Yeah, of course he is. He's an empire builder, and one of those things is he leads from the front. Like he's putting in his 100 hours a week. He is working over the shoulder of his developers, literally helping write the code. Like that's if you don't like that, if you don't want to keep up with the cheetahs, then yeah, go find another job. I didn't look too much into it.
This is such
a Wall Street thing to say. Yeah.
It's not just Wall Street. Like one of the things, because when I came up in New York, commercial real estate, and I'm like, this is such a New York City commercial real estate investment banking law firm culture that I think 98% of Americans just simply can't understand. It's like, there used to be a joke like, oh yeah, that law firm's a lifestyle firm. Because the firm is your lifestyle, it's stuff like that, and it's just it is what it is. If you don't, can't hack it, then get out. And I think Andy's very so. Moving on, there are a bunch of other companies you cover as well, so I don't want to lose sight of them. But specifically, let's talk a little bit about the traditionals, right? And by traditionals, I'm talking Realogy, Remax. I guess Keller Williams not public yet, but there's a lot of talk about them. Maybe Compass to some extent, and EXP. What's your take on them as a whole, and then specific sort of companies that the sort of the goods and pros and cons of each?
Yeah, I mean the resi brokerage world, the legacy or traditional world. I mean, they've been under this like verbal attack of disruption, and it really just hadn't happened all that much yet. I mean, these guys are still plugging along. I give a lot of kudos to Realogy and that management team. I mean, they've kind of figured out the secret sauce, or they figured out the formula where they can grow, they can give agents more commissions, and they can, to a degree, cut out costs and protect margins. I think, Rob, you and I talked about this many years ago, but the idea was that how much cost is there to take out? Can you do that? And I think they've done it. Clearly U.S. housing helped. It made everybody look a whole lot better.
Yeah. Sure.
But Realogy, I mean, like, you never let a good market or bad market go to waste, and I think they really structurally improved their balance sheet where it takes out this like going concern, and not to say that was ever really that much of a issue outside of COVID, but they've really kind of changed the complexion of their balance sheet, the whole thing around the guaranteed rate JV and setting up the ancillary services, like everybody's been talking about that, and these SPACs come out and talk about how they're going to take 20% of the market over time, and people buy into that when the market's super risk on and rates are at all-time lows. But like now, take a look back, and a lot of these guys hadn't done anything, and Realogy is showing you, right, hundreds of millions of dollars of EBITDA from cross sells. So they're doing it, right? They're not just talking about it. So I give them a lot of credit. I think that what they just wanted to do recently is buybacks, capital deployment, a dividend, and all that stuff. So Realty is pretty interesting. It's just one of those things where it's sometimes hard to pitch. Like right now, as you can tell, I mean, over the last 6 months, I break my world into two spots. There's like disruption, and then there's legacy. The disruption guys are down like 60% over the last 6 months, right? Just gotten annihilated. And the legacy guys are, I think, down 8%. So it's tough to make a call on some of these guys. But I think one of the things with realty right now is some people are having trouble finding what is the narrative, what's the story? Because if it's all just U.S. housing, a lot of investors don't feel good about U.S. housing. They feel like we're in a bubble. And you got to remember, a lot of the people who are making decisions, a lot of the portfolio managers across the U.S. who are managing billions of dollars and can make a decision in one fell swoop, a lot of them are of the age where they went through the crisis, right? They were investing during the last housing crisis, and they have PTSD, right? They don't any kind of they're pulling out
for sure,
right. And so, I think people are like, look, there's a lot of places to invest in the market. We're going to go underweight real estate. And they're going to balance out portfolios, and some of these big money managers are going to hit a button and it's going to sell everything that's interest rate driven.
So real quick though, because one of my thesis behind that is, do you think it's that they're saying underweight real estate, or are they saying underweight real estate companies? Here's what I mean. I just read a note from this analyst I follow talking about don't invest in gold miners. Invest in gold, right? So if you have this thought about inflation, right? You want an inflation hedge. His thing was, don't invest in gold miners, just get physical gold, right? So when you see all these institutional investors rotating out of the capital markets into actual physical real estate, like KKR, a lot of these hedge funds, sovereign wealth funds, institutional investors, John Burns, I think, has been really on top of that trend. Are you seeing or sensing that as well? Like, maybe they're saying, what, we're not going to buy Realogy. Yeah, we're going to buy homes. Do you know what I mean? Like, are you seeing?
Yeah. I mean, there's some companies out there that are a little bit more of a pure play on that. But the problem with like something like a REIT, right, is rising rates the spread game is not good for you. And then you could buy home builders, but raw materials, the cost to build is just through the roof, and then you've got everybody else who's touching it. So can you actually invest in a property, right, without having to do a REIT? That's more difficult. But I think you're right. It's more underweight real estate providers and service providers as it is the hard asset, right, or the actual build. But no, I mean, I think that makes a ton of sense. But no, I mean, I think it's one of those things where a lot of PMs right now, it's just, and these things don't last forever, right? This is why stock charts have these patterns, right? There's a sentiment, there's a shift, and then it gets oversold, right? And people come back to it. So I think we're kind of in that, not quite in that transition zone yet, but it's coming.
Okay, so that's Realogy. What's your take on some of the other big traditionals? RE/MAX in particular, because they just had a CEO change.
Yeah. I think RE/MAX is interesting here. RE/MAX is more of a franchise model, but clearly, I mean, a franchise model's, eventually it might be the highest on the flood ground, but it's, if the underlying industry's under pressure, you're going to feel that eventually. And if competition is there and splits there and all that stuff are moving against you, eventually that catches up with you. But, it still is a franchise model. It's got 60-something% recurring revenue. They pay a pretty healthy dividend. They've got 30% type margins in recurring growth that is kind of mid-single digits. So it's not explosive, but it's a good little asset. But I think the trouble with RE/MAX has been it's multiple. What investors are willing to pay for it, right, has fallen almost directly coinciding with agent count, U.S. agent count. So it's a problem. People cannot see through ancillary services, cross sales, and being able to sign up for mid-single digit organic growth over the next 10 years without agent count growth. And getting more revenue per agent. People just are not willing to buy into that right now. So I think the new management team, I think they see that. I think Steve is, I don't know how long he'll be there, maybe in the next couple of months, but he is very convicted in changing a couple of things. I actually had them for a non-deal roadshow 2 days ago. And that was his message: is this is undoubtedly our number one priority. is growing.
Agent recruiting, right?
100% was not mincing words. I don't know if you saw caught their last earnings call, but they threw something out, and I actually followed up with a question just to make sure that they said it again so people were paying attention to it. They talked about equity issuance. They've never talked about that before. What is the one thing that the really fast growth guys are doing right now? It's issuing equity. Why do some of these
Fathom, sure.
Why do some of these companies want to come public? To be able to issue equity. Everybody's going to be doing that. And so it's almost like table stakes. So Remax, being an old, sleepy, traditional, them actually pointing that out, I don't think you just talk to it and then move on. I think that was a hint. It's coming.
Right.
And like EXPI, you've got a 3% dividend yield. This is passive income for agents. You get that equity. They potentially grow with the equity.
Yeah.
And, as if you're Remax, you sit back in Denver in your boardroom, the idea is, again, it's just a trade-off. All right. How much margin are we going to trade? How much equity dilution are we going to trade to get agent growth? Because if we can trade off a little bit of dilution and get the agent growth, the multiple in the
what's
stock,
the multiplier? What's the multiplier in agent growth on everything?
Yeah, exactly.
Right.
The bingo. And so if these guys, just to frame this up, I'm not trying to get too Wall Street here or too much in the technicals, but the stock trades at 9 times forward EBITDA. All right. Historically, 12.5 or something like that is what it's traded at. The franchise peers trade at 15 to 16 times.
Mm-hmm.
If you assume that these guys were to grow their agents, get back to agent growth of like 4 or 5% U.S. agent growth, like they used to do in the past pretty consistently, if you believe that, it'll drive their growth up to about 10%, and that's going to be above the peer group average, and like you're going to get that multiple. You get the 15 times. That's $100 stock. I mean, Remax is sitting here at $29. And so if you give up a little bit of dilution, you get paid in spades. I feel like. I think that's kind of they're thinking about that, that trade-off, and I think that's coming. So we'll see.
So the question though is it too late, right? Because EXPI is specifically, their growth has been nothing short of astronomical. Like it's crazy. Astonishing. And right at their heels, we have Fathom, we have HomeSmart that's going public, we have KW that's been talked about going public. Presumably all of those guys will do they'll just follow the XPI model, right? Because it's just proven.
Real Brokerage just reported, I think 630 something % revenue growth reported today.
So is it too late? In the context of that, I mean, what's your take on EXP? What's your take on some of these other guys?
But then again, I mean, the other thing you might want to frame that also with is that, you talk about this equity model working, but look at Compass.
Yeah.
Right. I mean, those guys, also had an equity model, and that didn't work out too well. Right. So you see both sides of the equation with there. Maybe you could frame it a little bit on.
Yeah. So give us your take on that type of move overall.
Just on equity issuance.
But like looking at EXP on the one hand, which has been incredibly successful. And then like Greg said, Compass, which it's totally different markets. It's a little bit different model. Wise. Yeah. But then maybe there are other guys like Fathom or, some of these guys that you could throw in there.
Yeah. EXP is interesting in the sense that like when I think about it from my side of the world, it's a fund of funds. Like I can go get the resources and I can go build my little empire within that and just kind of change the name on the business card and keep doing what I've always done. I think that's the thing with XPI is it's one single brokerage. There's not franchise fees and stuff like that. I think that's one of the things that's kind of tricky for Remax is sitting as a franchisor. Things are a lot more difficult because you're having to affect change through all these various tentacles out there, So I think that's the main challenge for them. But Compass is. I used to be pretty negative on Compass because I was like, I just don't see how this model how they ever make money. Mm-hmm. But I think Realogy has shown you that there's a lot of costs to be taken out. I think Compass has been pretty judicious on its costs, and a lot of its investment spend right now is going to product development. It's not like facility costs and stuff like that. That's a lever that either you keep spending there and you produce something great, something we don't, the platform actually truly is transformational, or whatever you're spending on is not panning out and you wind that back. And so I feel like it's kind of a binary event for them. Either it's something good or they just cut it out. And the whole notion, I think with Compass, it's like you ask yourself the question, you could very well see their splits from a percentage standpoint decline in the years ahead. And it's not because they'll be less aggressive. It's because they'll be hiring more middle tier producers in those big markets. Because I think what their strategy has been is you go get that heavy hitter, right? The one who's got a network effect built around them, and that's your beachhead in that market. And then you build around that individual. So I think they're still, I mean, gosh, less than 10 years ago, they didn't exist. And they're number one brokerage, I guess, by sides right now, or by total volume. I saw that the other day.
They can't. Compass? Yeah. No, Realogy it's still Realogy Home Services.
Well, I think this is one of the things about
luxury market there, though. You know, the houses they sell is crazy. So the sales volume might be true. Yeah.
No, I think when it's this is the funny thing about numbers, right? And all these real estate stats is like you can use whatever one works for you. Is it size? Is it volume? Is it by region? Is it franchise versus brokerage? I think that stat is coming probably from Real Trends as the single biggest brokerage. Realgy's got, you know, obviously
yeah, that's right.
Yeah. 21 and ERA and all that stuff.
I haven't seen that. I mean, it's because Realogy, the brokerage division, just the NRT, and the home services, just the brokerage, not the franchising. It's still number one or two, but maybe it's changed. I have to double check.
Go check out.
Okay.
On their social media, I think probably Twitter, Instagram, all that stuff. They hit something I think yesterday on it. But anyway, Compass. Yeah, everybody, and Rob, I agree with you. Everybody's singing the same, and I can hear this for sure myself, because when I go on the road with these individuals and I go to conferences or we go to their analyst days, they're all saying the same thing: ancillary services.
Yeah.
And so I think it's one of those things where did something just click where all of a sudden that starts to work? Mm-hmm. Or is everybody just talking it up as a narrative because it's a way to expand margins and something people can buy into? Because Wall Street, as you guys know, is like a stock is made up of two parts. It's the numbers, the fundamentals, and it's what you feel about it, right? It's the sentiment. I talk about the multiple. That's kind of the sentiment side. And so you can make a stock work with the numbers not doing anything as long as people will have a belief that things will work, right? Belief that margins will double because I can do all these ancillary services. So I don't know if people are really preaching this now because there really is something that's starting to click, or if it's something that everybody's viewing as investor, or, everybody's thinking investors buy into this, so we got to say the same tune and people will give us a bigger multiple.
So there's a question that I've wanted to just ask someone. And again, I know you don't cover financial services, like that's not your bailiwick, but clearly your firm does. So you probably know those guys and at least have some conversations. Mm-hmm. In your view, what's more likely to happen first? That these brokerages achieve massive scale in ancillary services, or could the mortgage and title companies start brokerages?
It's a good
Rocket is already doing brokerage, right?
Yeah, that's exactly what I was about to say. Yeah. It is vertical integration, and it can work just as easily the other way. I think it's probably easier to back into a mortgage if the title operations can be tricky. I mean, there's licenses. I mean, I guess it's somewhat similar to on the brokerage side, but licenses in every state. There's multiple different regulators. And then you got to determine where you're a balance sheet driven lender, right? Which is really tough to do. Or are you getting funds elsewhere? You're a non-bank lender. So there's a lot of intricacies there. Title is probably a little easier. Clearly, it's going to be tough to be an underwriter. That is a true oligopoly. But it's not, I don't think, overly difficult to become an agent. But, lots of regulations there too. I mean, it's just kind of a minefield. And so I think this is why you have RESPA lawyers that's all they do, like full time. And there's a lot of them out there. But no, it's a good point. I mean, and I think once you start seeing people like Rocket launch brokerages, or people like Loan Depot, with Mellow Homes and stuff like that, it does kind of validate it, right? The idea that these things really are. And again, this is my entire coverage list. When I pitched my director of research on covering these random companies, he was like, "What are you talking about?" And this is my whole view. The lines are blurring, right?
Yeah.
Part of the reason, and U.S. being the largest asset class in the world, part of the reason you hadn't seen all this private equity involvement is because it was too many nuances. Like as you go close a house, 30 to 45 days, you close, you sign 100 something documents. Like there's a lot of parties and it's very complicated. And so the way to win is put them all together, right? From an LTV to CAC standpoint, you pay the cost on one time up front for the consumer and you get all those multiple iterations of revenue events. So all I have to say, I think it's coming. And, I think you're starting to see these vertical integrations, these lines starting to blur across the value chain.
All right. So I can't believe we've already spent almost an hour, and there's so much, like we could be doing
Sure.
3 hours.
Part two coming, right?
There's some other things that we have to touch on. The biggest one being Open Door, OfferPad. I don't know if you're covering iBuyers specifically, but I know you have thoughts on it, especially because Zillow was in iBuying until Q3 of last year. So what's your take on Open Door? What's your take on iBuyer, the whole market maker model?
Yeah, I mean, for me and Rob, I think I've been like on record of like there is a market for it of maybe less than maybe 5%. Rob's like,
whereas I'm saying 60%.
Yeah. So please settle this bet here. Settle the score here.
Rob, I'm definitely closer to your side. I think 5 or 10%, 15% maybe. It's there's a use case there, and especially if you think conditions stay like this, there's a use case there. Like if this is why there's such thing as power buyers and cash buyers,
right.
You have to entice your offering. And so sometimes that helps you get out. And like when home prices appreciate as much as they have, when you build this degree of equity, taking an extra 1% fee that's no problem. For a lot of folks. So I do think it makes sense. There's no one in this world who can convince me that, or who can, take me off the position of, home prices really helping these models. I mean, we often talk about home prices appreciating year over year. Like, hell, it's been month to month. It's been week to week.
Yeah.
And when these guys are playing with razor thin margins already, if you get a 2% sequential lift on a price, like that is a game changer, you know? So I do think it's one of those things also where to build, I think for Open Door and OfferPad and these guys, what's left after Zillow is one of the things, like it wasn't great to have Zillow as a competitor bidding against you, but it was great to have Zillow as a proponent of the entire industry, right?
Right.
Zillow was, basically supporting that. I just think it's one of those things with Zillow backing out. Like I said earlier, it's part of the next best alternative. But like, what if it was? And this is kind of a shame on the management team for taking this long to kind of come to terms with it. But like, did they just wake up one day and say, "God, this is so crazy right now. Can you imagine if we want to do this at scale over time? Like, how impactful this could be to the balance sheet and how dangerous this could be." So I do wonder for guys like Open Door. I mean, how sustainable is the model? It's still a struggle to me.
It's just weird to me, like going back to Rich Barton saying on that one podcast that he thought that Open Door was an existential threat to Zillow, right?
Yeah. Stratechery.
Stratechery. And now I guess it isn't. He's saying now, right? As you're saying, somebody figured out like we can do this some other way without the risk and get all the benefit, right? I mean, and I guess, going back to what you said, I think somebody told me like Zillow's only been profitable 3/4 of their entire life. And, but you're saying also Wall Street says, well, they like the story. So as long as they believe in the story, they're going to keep buying and keep promoting, right? But there was definitely a little dip in their story for sure when they left that, right?
Yeah. Yeah. It is, I do think, I just don't know how much of it was, and I think this oftentimes with Zillow, and same thing with CoStar, is things are much easier to understand in retrospect, right? But you can see the kind of puzzle pieces put together. So I think we'll find out soon whether Zillow really went to something just better, and maybe iBuying's still a fine concept, or iBuying's just terrible and they just want to get away from it, right? If nothing else happens in the story, there's no other, the super app doesn't do anything, and showing time acquisition really doesn't pan out, and they're just kind of stuck. They were just getting away from iBuying, right? So I think we'll see.
Yeah, to me the story is it's a fight between Barton and Florence to see who wins, and then you have this iBuyer thing that you don't. It's a little bit of a wild card, and that's in the waiting in the wings, right?
Yeah.
All on the backdrop of this crazy market right now, right? Yeah. And it is such an exciting time to be in this. I mean, I say this every year. This industry does not. It just is undefeated in the amount of drama and storytelling and everything it can give. It's so fun.
I don't know if you can see it in the podcast, but I got a lot of gray hairs now, and these happen over these have happened over these years, keeping up with all this stuff. But yeah, it's been a truly exciting space to cover. Yeah, we'll see. OfferPad showing like flexing its profit muscle, that was important.
Yeah,
I thought it was so funny they threw a profit party. When they hit profitability, they threw a party. I'm like, you're going to spend money because you were profitable. Okay, I got you. But no, I mean, I think doing it. I think what Zillow's point is I think OfferPad showed this, that when you try to scale too quickly, that's where stuff breaks. And OfferPad has been slower share gains, but has been very selective and has shown that there's a path to profitability. I think the question is, can you do it at scale and ever become consistently profitable throughout any cycle is the big question.
Yeah.
Mm-hmm. All right. Again, we could talk for much longer, but the two sort of more rapid fire type of things. I know you cover the housing market because it's so important to how these stocks do, right? And you've released some of your thoughts on it. And we've talked about the crazy, insane housing market, throughout this thing. And Greg and I argue about this all the time. And actually, we need to do an episode, Greg, where we just talk about, the housing market. My opinion that I've been holding for a while now is that we are not seeing a hot seller's market. We're not seeing a housing market. We're seeing dollar devaluation, which then drives a lot of different things. You don't have to agree or disagree with that. What's your take? What do you see housing market doing this year, maybe next year, especially as the Fed is now talking about tightening and raising rates and all of that?
I can't tell you what I think units and price are going to do, but I will tell you I think volume stays up this year. I think it's probably up next year too. Frankly, I think it's
6.2, 6.3.
Yeah, somewhere in that territory. I think up modestly. There's not a breakout coming anytime soon. And this is another longer conversation, but if fees are lower and stuff like that, I do think there's a lot of upside to existing home sales over time. But here, I feel like we're kind of top of the cycle. It's like one of those things where I don't know what really breaks that cycle anytime soon. I think we'll stay at the top for the next couple of years.
Couple of years. Okay.
Yeah.
So you're talking still like double digit, 15 to 20% home price appreciation.
No. I think what we'll end up seeing is down modestly units and up modestly price. I think 5-6% growth next couple of years, and I think
in price terms.
I think price starts. Yeah, price times units. Right.
It's hitting the close to. That's what you're saying. Is the peak is on the appreciation? Is what you're saying?
Yes, I think home prices are getting now. If wages grow faster, whatever, we'll see. I mean, if you look at affordability, there's still some room there, and I do think I'm one of the believers that I do think the pandemic permanently changed the idea and the notion of the home, right? Where people wanted, it's more valuable now. So maybe you're cutting out of vacations, you're paying more for your house. Mm-hmm. So I think that's impactful. But I mean, from an affordability standpoint, I think the average mortgage payment as a percent of income is at 17, 18% right now. So it's high. It's higher than what it's been over the last several years, but it's in line with where it was in late 2018 when rates were up. And that's important to call out. I mean, think about how much home prices have appreciated since 2018. And from an affordability standpoint, at least by the metrics we follow, kind of the same level. And some of that's been wage growth and stuff like that. So.
All right, cool. And then finally, some other companies in the space. I know you cover Title. I know you cover others. Like who's interesting, who's exciting that we haven't talked about?
Yeah. The one I want to call out real fast on Redfin.
I can't believe we didn't talk about Redfin.
Yeah, we got to talk about Redfin.
We got to talk about Redfin.
Yeah, so I initially, when I launched coverage a couple of years ago, I started off with a sell, which is a pretty big thing to do when you start your coverage, right?
Yeah.
And then I double upgraded to a buy, and went back equal weight around COVID because just a fixed cost model during COVID was terrifying. And then I upgraded, a couple months after that and just downgraded, right? So I've been all over the place with Redfin. And this last downgrade, I got to the point where I'm like, I've never really set myself and stared at myself in the mirror and said, is this model right? Is this model right for the industry? Mm-hmm. Your agent, you're having trouble with attrition, so you're having to pay for more agents, or you're having to pay more for your agents. Part of the belief over time is technology driven. You would do more transactions per agent, and so you could leverage that fixed cost of the salary of the agent. Now that's going down. they're basically telling you that they kind of peaked out in gross margins during the pandemic, the early part of 21. So like that's as high as we can get. And then if you think about these lawsuits, and I feel bad for them that they're getting sued. It's like housing discrimination stuff, because the way their model works, their partner agent model works, is if the home is a certain price point, if it's too low, they can't service it. So they kick you. So they move you elsewhere. So to a regulator, if they look at certain races by price points, which is more of a society issue than a Redfin issue, and they don't pay attention to anything but the race of the individual, that Redfin is saying, I'm not working with you, then it looks really bad for them. So the idea now is, their partner agent program, can they continue that? Or they're going to have to change it, because that's a huge part of their model that allows them to be a W-2 salaried provider and have ability to kind of flex with the flow of housing, right? So they can monetize some of that traffic that they wouldn't be able to get otherwise, So you ask tough questions around that. They just acquired a mortgage brokerage company, a traditional brokerage company called Bay Equity, and they completely eliminated all their back office technology spend on mortgage. The whole idea was the digital value chain and homegrown technology with a feedback loop with agents, and you build your own technology. And then they took all their staff and got rid of them and replaced them with traditional mortgage staff. So I don't know. I get to the point with Redfin, I'm like, gosh, stock's gotten so beat up, and every stock's got a price, but got a buying point. But there's some questions on the model I have now that are kind of left unanswered.
Interesting. All right. Cool. Anybody else before that we just thank you and try and reschedule for like a full-on debate about
part 2 and part 3
or something?
Yeah. I'd love to jump back on. I love these conversations, and it's been a pleasure.
Say, are there any startups like that aren't publicly traded? Maybe you're not covering them, but that you saw in our space that's particularly exciting to you?
I kind of like Picasso.
Nice.
Picasso is kind of interesting. The second home ownership and stuff. They've got an interesting model around that I think, they're going to get a property management fee for doing. So they've got an interesting little revenue model tied to a growing popular concept, So that's something you always keep an eye on. I've been keeping an eye on a bunch of the folks out there. I mean, like guys like Homelight is one I've been watching. I like some of these property tech players around like the SaaS property management players around like multifamily and stuff like that.
Like Appfolio and
those
guys.
Well, I had an underweight on Appfolio, and I just put them at equal weight recently. But RealPage was acquired by Thoma Bravo and private equity. But there's a lot of little smaller concepts out there that are pretty interesting. I mean, I'm a big believer in like the ancillary services, like cross-selling. Once you get that unit, it's a land and expand approach where you attach the payments and property insurance and property marketing and stuff like that. It's pretty interesting.
Yeah. Well, awesome. John, it's always fun to talk to you.
Yeah. My pleasure.
We really have to try and schedule like a part 2, part 3 to get like real deep into some of these issues. But
we need to get together and do it over drinks.
Seriously, that would be ideal. We can't record those, but that would be really fun. Look, maybe if you come to like Inman in Vegas or something, because I live here, so we'll all go out to dinner and have some drinks and have some.
And tell you what we really think.
Yeah, exactly.
So listen, I figure most of our audience that's in the position of wanting to talk to an investment banker, to an actual Wall Street analyst, they probably already know you. Shame on you if you don't know John Cambell and Stevens. But in case somebody wanted to get a hold of you, how do they find you?
Yeah, my email's just john.campbell@stevens.com. That's with a PH. Yeah.
All right. Like I said, one of the finest analysts on Wall Street covering our industry. Thank you, John, so very much.
Thanks, John.
It's been a pleasure. Thank you, guys.
All right. So that was
great. That was that was spot on, and I like your questions. And I think back to like there was a post I wrote called CoStar's Big Bet Against the MLS. And, a lot of people said, well, that's a strange take. That's a whatever. But I mean, I think this to me kind of confirms exactly that. It is a bet. It's what do you call it? A put option or something, or a call option?
Call option, right? Yeah.
A call option. So it's exactly what you've been saying, where I think we put it at that point. If the asteroid hits the MLS industry, this model is the way to go. And it's in his mind, it's a relatively small price to pay with the acquisition of HomeSnap and Homes.com.
Yeah.
And then if they stair step this content strategy first, and then, more advertising revenue and blah, blah, blah.
Yeah.
I think the biggest things is, number one is, for CoStar at least, is that if these lawsuits turn into anything, they might not. And the other thing is, like, this market, as he said, this is such a crazy market. Who's going to win, right?
I think, I don't know. We got to do it. We got to do a deep dive into CoStar and what's happening and the industry as a whole. But the one thing that this isn't a conversation with John, right? Because John covers, the big public companies, and he's covered CoStar for 10 years. But one of the things when he was talking, what I was thinking about was like $320 million, going to spend it doing content, blah, blah, blah. I'm like, dude, how many MLS can do that?
It's not their job, but yeah.
Yeah. But that's a conversation, right? Maybe the MLS need to unite and come together and, collect their budgets, because if that's something that Andy's doing, then that's something MLS needs to think about. And yet, why aren't they? It's that whole conversation. But anyway, we're already over an hour, man.
Yeah.
And I know our listeners like us and all, but this is a bit long, even by our standards. So let's just wrap up. Let's say thanks to people who have tuned in. Say thanks to John for joining us. And I don't know, any final messages, Greg?
No, just great to have John on. It's your contact, so I like you bringing these really smart guys, and I always learn a lot listening to you and John for sure.
All right. Thanks, everybody. Peace out.
Peace.